All right. Hey guys, it's time for another video. Elliott Wave theory. We're going to take a look at crude oil, metals, and the dollar. I think those are the most important things to look at this week, including the Nasdaq. We'll take a peek at the Nasdaq. All right, let's start with the crude oil chart, looking at a daily chart because I want to give you the broader context. I'm going to breeze through this. Look, just as a reminder, so after that COVID low, we came flying up and got this high over here at $130 a barrel. And then we got an impulsive move down, but it is overlapping with wave one. So this is very likely a large diagonal as we search for a bottom. So after three down, I think we had this overlap, but the way price range kept contracting, it does meet the standards for a triangle. So in Elliott Wave speak, this is a wave 4 triangle. And you may notice sometimes in your trading view platform, you'll see A, B, C, D, E. You'll see that labeling. And that is for a triangle most commonly found in wave 4 position or a B wave. Those are the two most common ones. So if you assume this is a wave 4 triangle, some people put the 4 up here, some people put the 4 here. At the moment, I'm measuring it. This is the top of wave 4, but we'll see. I'm going to adjust that if needed, depending on how price follows through over here. But the reason I'm showing you this larger degree triangle and the fact that we're in a diagonal is because wave 1 of 5, right? The 5 that goes with this wave 4 should be composed of 3 waves. And as a diagonal, inside of each of the subwaves will be composed of 3 waves as well. So let's get on with it. So for wave 1 of 5, it should be composed of 3 waves. And that's what I've got here. A, B, C. Okay, then we have a 3-wave correction for wave 2, which even in a diagonal should be composed of 3 waves. That's what makes tracking crude right now so difficult. Is it's moving in threes all over the place. Even on the big scale, it's moving in threes, and even on the nano stuff, the small degree scale, it's moving as a 3. So, but that helps us, right? Because if you know it's moving in threes, you can just take it at face value and expect it to move in threes based on Elliott Wave rules in a diagonal. Okay, so you got 3 waves down for wave 1, you got 3 waves up for wave 2, and this is where it's getting wild. If wave 3 in a diagonal is to be composed of 3 waves, that's going to be an A, B, C. But as I was just showing you how a wave 4 can be a triangle, the B wave could also be a triangle. And considering how nasty this overlap is, if you are to consider that, what it just means is the range of price is contracting. And when it finally contracts enough, it is going to either break out or break down. One of the two. Now, of course, my bias is that it's going to break down just because of all of the preceding structure is bearish. I've just shown you that, right? We're making a whole series of lower highs, a whole long series on the daily chart of lower highs. That is a fantastic clue. Not by a little bit either. I mean, this thing is bearish on the daily. It is just unquestionably bearish. So let's drill down to the 4-hour and get a little bit more specific. And in fact, I really don't even need to drill down much lower than the 4-hour to give what I would consider to be actionable levels. So what I'd really be watching for is if the trend of making lower highs is going to continue, then price should not get above this high. And keep in mind, this is the February chart of crude oil futures on the NYMEX. That last high, but the structure will be the same regardless of what you're tracking. But this high right here, 71.97, to me is important. Price should not get above there. If it does, something else is going on. So I'm just going to mark this green arrow as a reminder to myself that that is a key level. And then also down here, now keep in mind, this is a 4-hour chart. We came down, and as I've said, things are moving in threes. Now, look, I've measured all this stuff, but when I change it to February chart, February contract, I lose all the measurements. So I'm not going to recreate everything because if you've been with me and you've been following me, you already kind of know where I'm at, what I'm looking for. And I just said it, I'm bearish. So, but in order for me to be continually bearish, I do not want to see it get above, just call it 72. And an immediate way to look at this structure is this downturn measured very well as a three-wave move. See, the assumption is everything's moving in threes, so I'm going to look for it to move in threes, and when it does, I'm going to take it at face value. So this is three waves down, and the yellow fibs, if you've been following me at all, you know the yellow fibs are typically what I'm looking at when I'm looking for three-wave structures. And if it wanted to extend, it had every chance to do so, but the size of this bounce has me thinking it's going to come back up. So that's my thinking. But a solid clue for that is if it comes back down and gets back, actually, if it gets below this, so what I'm going to do is just drag this down a little bit, actually a little bit more. If it wants to come back down and give, I like to use a 1 hour chart. If it can get a 1 hour candle close in this zone down here, I like that to continue selling, to grab. Why? Well, because it already had every chance to crash from there. It's coming back up. Yeah, it's making a lower high, but it stopped going up. It's kind of consolidating right there. But the idea is if it comes back down, it is more likely, because of the reaction that it's already had, that you can target lower levels, something like this, 67.30. So 70, 80 is that level up there. So I'm just going to put that back. Okay, so here are some parameters. 780 to the top side and down in this zone right here, just call it, well, 68.50. If you can get a candle close on the 1 hour below this area, really, I mean, you could call it 68.50 if you want. The bottom of that wick on the February contract of crude oil futures is 68.42. So yeah, just call it 68.50. If you can get a 1 hour candle close down in, I mean, I'm giving you like a 20 cent. Let me make it 30 cent zone. If you can see a 1 hour candle close down here in this zone, and if it just rips through it, look for a back test to get short and then scalp down to the next level. The real zone for support, this makes really, to me, the way I think of things, this makes really good sense that, yeah, it could bounce from here, but if it gets below here, I think it's just opening the door. I mean, it's going to bounce, right? Nothing moves in a straight line. So, and then if I were looking for a swing trade, ideally, and I know this is not very helpful, but it may become helpful a little bit later in the week. If price gets up into here, I want to see how price projects whenever the current consolidation is over. Talking about this little consolidation that we're in right now, because depending on where that consolidation ends, if there's a structure that projects up into this box, I like this for a swing short area. Just call it somewhere between 71 and 72. So either we get up into this box to get a reversal, and I'll just, doesn't have to go to the top of that box. I'm just going to put it dead in the middle because I don't have enough information right now to project the way I like to. Sometimes if you wait for a little bit more price information, we can take the measurements we need to project to come up with a slightly more exacting target. But for right now, I'm just giving you these zones. So that's one idea there. And then if it just comes down more immediately, like earlier in the week, like it just can't make a new high and then comes down and gives you a candle close, I think it's more realistic to try to scalp it down to this next zone down here. Okay, and maybe this is a good place to put a level right there. I should probably be doing this on a slightly lower time frame, but you know what? This 4 hour chart Why not? This is just as good. All right, boom. So what is that? 69.85 is a bit of a ceiling on the lower time frame. 69.85. So 69.85 is like immediate ceiling and also could be resistance. Now look at this candle. They came up to grab this liquidity right here. So are they done with that? Or are they just going to come up? And if they're going to come up, the way I think of this, because of everything that has preceded this, and based on what I know about Elliott Wave, if this is going to come up and get much above where I would typically look for them just to grab this liquidity and keep going lower, they're going to get much above here. I think they just come up into the zone. Why? Because this is a perfect three-wave structure. And even internally, I didn't measure this, but even this is a three-wave move down for the C wave, 1, 2, 3. So, or A, B, C. So this thing is moving in threes. It measures well as in threes. These other zones in the past that I've measured have served me well. So this is a very difficult chart, not easy, not clean. I'm not even going to get down to the lower time frames because really these are the levels. Okay, so there's your levels for crude oil. All right, let's move on to gold. Now, gold, as you know, if you've been following me, this top is perfect. Of course, I lost all my measurements because I switched to the February chart in the futures. This is the COMEX data feed for gold futures, the February contract. We topped. I said this is not enough time off the clock to be all of wave 4 in spite of this massive rip. I still consider this a B wave. Then we got rejected very nicely from there. We've been chopping and consolidating in this range, but it just seems like based on timing and price for a wave 4, this is a major degree wave 3. Wave 4 should burn more time off the clock and come deeper. Now, can anything happen? Of course, anything can happen. I could be dead wrong. I'm just saying when this bottomed right here, there was a couple of things I didn't like about it. Mainly, it didn't come down to touch the 382. I mean, really, it's not even close. And in terms of how much time it burned off the clock, it was almost nothing. Wave 4 should burn at least, the way I think of it, at least 50. It's hard to explain all this without explaining a whole nother thing about the timing fibs, but it should get at least to the 50% point of these two lines, just based on my measurement of timing for a fourth wave. Okay, so for this to be all of wave 4, that's amazing. That means it barely burned any time off the clock when in reality, this wave 3 took it took a year. In other words, it took over a year to finish wave 3. So wave 4 should take up anywhere from 382. Actually, let's put the 382 on. Or did I already do this on the lower time frame? Oh, no, I think I did that timing thing with silver because it's kind of the same idea with silver. So I'm not going to waste your time. I'm just going to give you these parameters. The idea with gold is I think it needs to come lower to finish this off. So if that is the case, I don't think it's going to come much above this, and it's certainly not going to come above this 27.16 on the February contract of crude oil futures. So for me, and the way I think, the next tradable area is up here. If you got a scalp, maybe scalp to the long side. But actually, let me just measure this as a potential three-wave move, which is what I would think of it as. Yeah, that does not project high enough in there because if it is, or maybe it's going to be a shallow look, if I just take it at face value, it's possible for this to only come up a little bit more before it gets rejected. It is possible because this is clearly three waves. Clearly. Let me drill down one more little. Okay, so I've already done the work. I forgot about this. I did this work already on Friday morning, or was that Thursday? Thursday morning, rather. Yeah, Thursday morning. I created this chart and it followed it almost beautifully. It answered my question here. So this has moved in three waves. It already has enough waves in place for this to be all of it. But just looking at this by eye, I hate to get down too nano here, but I will, because as a scalper day trader on my own, this is what I'm doing. But I'm really focusing on giving you guys actionable parameters. So if this is a C wave and it's composed of 5 waves, all right, let's keep it really simple. So if this C wave is going to be composed of 5 waves, I'm just going to go right to a ratio and just see if this is all a wave 4, what would I need in terms of ratio to see where that 5th wave of C might top. So now look, this is just pure speculation here, okay? Pure speculation, but the idea would be if this is going to come back down a little bit more in a wave 4, if this is going to get back down a little bit more in a wave 4 and hold this, another way to look at this is a back test of this zone, which is, that's another story, but look at this zone. How many times has price interacted with this zone? How many times has price back tested this zone, failed the zone, back tested it on the way down, it back tested on the way up, it back tested it on this bounce, it back tested, well, not really there, but here, back tested it and bounced there. So wouldn't it be poetic if price comes down and back tests this zone again and then gives you a 5 wave C wave before it rolls over and dies, basically. So one last measurement I would do on gold on the future contract for the month of February. One other measurement I would take is, now this is where it gets weird because this wave 1 really is pretty awful, but just to keep it simple, if I consider this wave the bottom of wave 2, and this is the top of wave 3, and then I go to my trusty template and look for the measurement of a wave 4. You can already see that we are already in wave territory of wave 4. Let me clean this up. 2653.80. 2653.80. All right, so these blue fibs are where you would expect to see a wave 4. So, I know I'm getting in the weeds here, admittedly, but you know what? Guess what? This is how you do it if you're a scalper day trader. This is the level of work that goes into my charts. It did a lot of stuff you don't see because I just try to give you the parameters, but today you're seeing the sausage getting made. So the idea would be if this is a 5 wave move of a C wave, 1, 2, 3, 4, then I mean, this could be all of it. So, here, let me give you a more of an actionable parameter then. This would be a good clue right here is the top, this price right there, which is 26.2230. Below 26.2230. And that is a warning that it could be over and we're going down. Okay. This is a warning. If price gets below 26.2230, it's a warning. And then the next level to break is this level down here. Okay. So yeah, I like this. I'm gonna leave it at that. Okay. And so the nano, just in case you're still really new at Elliott Wave, like wave C would be composed of 5 waves. It'd be something like this. Now keep in mind on the nano, meaning this super smaller structure, price action is far less reliable. I mean, it's the same idea as a guy who's trading 3-minute candles versus a guy who's trading a 1-hour candle. You're going to get a lot more squirrely price action and so forth on a lower time frame candle, right? So if the C wave is composed of 5 waves, it is possible that you need another 4, or we're finishing off this wave 4. Okay. And actually, I even noticed, I'm sorry this video is getting long, but hopefully you're learning something here. I'm noticing that this already just looks like 3 waves right there. Um, and I'm not even gonna use a magnet. I'm just for the sake of education, I'm always looking for 3-wave moves and corrective positions. So if this is going to give you a 3-wave move down, and I go over to my template for A equals C, which is the most basic 3-wave move down, and then you can see, let me brighten it up, where the 100 fib is where it would target ideally, but that's just an ideal. The yellow typical fibs is the 100 fib, the 1236, and the 1382. So look at that. It's possible, and this is no coincidence that where I'm finding these yellow fibs happens to be right in this zone, which also happens to be right inside of a zone for a wave 4. So in and of itself, does that mean, well, first of all, I wouldn't even be shorting for that little bit. What I would be doing is trying to take a long scalp rather than a short scalp, but I would take a short scalp if this comes all the way back down without making a new high. If this comes all the way back down here and gets below this level, I would consider a sell from down here. So that's a parameter, 26, 22, 30. And the other parameter up here, let me zoom out a little. Yeah, there's a pretty good parameter there. I mean, this is so ideal. I really wouldn't. Now, I'm not saying I would long this just because it gets above here, but this is going to be a clue right in that if it can make it above that zone. That's a heck of a clue because all of these measurements are measuring out nicely. So let's see what these parameters do. Just call it 2670 to the top side and 2622 to the downside. So I'm giving you a $50 range, but I'm giving you some very clear levels. If you can zoom in and write down or make these levels on your chart, 2670 to the top side, 2622 to the downside. It can come up a little bit more if it makes it up as close as it can get to 2670 without breaking out. Then you may want to attempt a short scalp from really anywhere above 26, whatever this last high is on your broker. But it's in terms of structure. As soon as it makes a new high there, I'll be eyeballing it to look for a short scalp, which I'll leave a runner on because it's possible that this gets a lot more downside. All right. So now let's move along. I'm sorry that it's taking so long. Here, this is a good place to take a short pause and say, hey, if you're watching this video for the first time and you're getting value, or maybe you've been watching my videos and getting value, I do appreciate if you give me a thumbs up. It helps the algorithm. If you want to get notified when I make a video, you know what to do. Hit the subscription button and then hit the notification bell so you'll get notified when I make a video. If you're really looking for ideal expert guidance on scalping and day trading these instruments, indices, commodities, currency pairs, which I haven't gotten to yet, you got to click the link in the description of this video and join us inside of the Professor Trades Club. His name is Armando. He's a beast. He's the best I've ever seen at scalping. 80+% win rate over a period of 1 year. Think about that. I think it actually was 83% in a 12-month period win rate scalping, day trading. That's crazy. And I'm watching him do it every day. We all are. If you're members of the club, you're in there, you're seeing it. Less than $1 a day, join the club. You're getting the Elliott Wave stuff for free. What I like to do is use both. In the club, I'm looking at Armando's stuff. I'm always watching him, watching his trade signals, watching his alerts, watching the way he accounts for structure. I think that's why I fit with Armando like peanut butter and jelly, because Elliott Wave is all about the structure of price as well, based on Fibonacci, which Armando inside of his club is using Fibonacci as well. Although he's not using Elliott Wave at all. He's using a much simpler manner to grab 20, 30, 40 pips at a time, which is all you need, honestly. So what I'm doing is I'm trading his method, and then I'm leaving the runners on for the Elliott Wave stuff, and I'm protecting my positions. As soon as I make some gains, grab them, and then protect the position, keeping an open mind to the Elliott Wave projections. And that's how you maximize your wins once you're in a winning trade. You know, you hear people say, oh, I wish I could let my winners run longer, or I took it off too soon. And then you're sometimes don't do this, but sometimes you take the gains and then it keeps going and you think, oh, I shouldn't have got out. Then you get back in again. Then it reverses. And then you're giving back gains. If you do that, if you move your stops, if you play those games with yourself, I encourage you to join Armando's room for the psychological benefits of his method and manner of trading. You're going to get the psychological support you need if you're making those kind of mistakes. Anyway, that's my plug. Let's get back to the charts. Let's hop over to silver. And here we are. Boom, boom, boom. Same thing with silver. When this came down over here, if you guys were with me, remembering those videos, I was saying I don't think that came deep enough to be all a wave 4, and it didn't burn enough time off the clock for a wave 4. So then when it bounced, I wasn't buying it. This came up in 3 waves. I think it's a 3-wave B wave, and that's exactly what I believe it still is. And look at that rejection from up there. So now the question is this wave 3 and it's getting a wave 4 now? And we need one more shove down, which the ideal target based on this structure would be 2790. Now, I don't know if you remember this, guys, but if you've been following me for any length of time, you know I was talking about 2929 a very long time ago. I was talking about 2929 over here in mid-October. Yep. And here we are. Look where it bounced from, 2929. So is this all of wave 4, meaning we are done with wave 4 and we are now going to go up into the 40s on the next move? How would I know that? I don't know. Sorry to disappoint you, but if you were thinking I had a crystal ball or something, let me disavow you of that idea. What I would say is I still don't think this has burned enough time off the clock to be all of wave 4. Although I must say, based on the structure, it is looking more and more like it is trying to finish this structure. So I may just have to accept the fact. And hey, where this made a low over here is still burned another month off the clock. So yeah, I didn't think this, I was more confidently saying, I don't think this is the bottom because it didn't burn enough time off the clock and it didn't even make it to the 3A2. Well, now we've burned in silver futures, COMEX. We've burned another month of time off the clock. We've made a lower low and it struck the 382 fib at roughly 29.29. So what does that mean? It still means I don't know what's going to happen next. But if I'm a clue gatherer, which is what I am, if this is going to be a wave 4 bounce and we're going to get one more shove down, it's not going to come up too much higher than this blue box. There is a zone there the price has interacted with. Now you can see I combine Armando's teachings, everything I've learned from Armando, I combine it with Elliott Wave. And over the time that I've been with Armando, I have this accumulative effect of improved levels, improved profitability, better trading, better P&L statement on a quarter-over-quarter basis. So part of it is looking at these zones. So here's a zone. Boom. It acts as support. It fails. It acts as support again. Comes back down, kind of fails, rattles around that zone, comes below it. Then it crisscrosses it. Then it comes back and it's support. And then it's lower support. Then it's support again. It comes all the way back down. Now we're bouncing off of this large degree level 382. So my idea is, wouldn't it be poetic if price came back up, got rejected in this zone? If it's 30.75, I will consider that a wave 4. Although I got to say, man, I'm sorry I'm talking a lot. I wish you guys could just know everything I know about Elliott Wave but I'm trying to dumb it down and simplify it. Not dumb it down, that's the wrong word. Simplify it and try to present what is most likely. So this is the area that is going to decide what is going to happen. Okay, so if I drill down one more level on the time frame, I could very easily count this as 3 up. So just as here, I'm looking for this as a wave 4 to the downside. So I don't really want to see it much above 30.75. Definitely don't want to see above 31.15. Above 31.15, it becomes more likely. Now, I'm not saying the low is in, but this is getting really interesting here, because if this comes down into this zone as a wave 4 and gives one more shove higher, so that could consider this 5 waves up based on where this is in structure. If you get 5 up from here and the next pullback is in 3 waves, this becomes much more likely that the low is in. In fact, because that is sitting right on the 382 fib, which is really the minimum ideal for a wave 4 of the larger degree. I'm just going to highlight that to indicate its significance. It is possible that that is all you get in silver, but again, my feeling, my instinct is that this is wave 4 and it's going to get one more shove. But look, it's not up to me. It's up to the price. So the best I can do is give you parameters. So on the lower time frame parameter, let me give you one. Look, man, I mean, this is the real parameter right here. 29.59. 29.59. Below 29.59 is much more likely that you're going to get a deeper final move down here. Like, what is that? $1.50 lower to 27.90. So you make it below 29.60. It's possible to see, what is that, a dollar, whatever that is, it's down all the way to 27.90. Okay. If this holds somewhere in this blue box and you get one more shove up for a 5th wave, and I'll be measuring for that inside of the professor's room, but I'm going to give you a sort of a sneak peek of one of the way. Now, this is speculation, so this is not part of the parameters. This is just me showing you how I speculate. Let's say this wave 4 came back and just exceeded the 382 a bit. Then where a zone for a wave 5 is, call it 30.50. Okay. So if price can come down like for an A wave and then bounce in a B wave and then get a C wave down to just below the 382 and then start bouncing impulsively, then I'll look for a small 5 wave move up into this zone. If that is the case, this is going to go a long way towards suggesting that this is the low, and you're going to see in the low 40s next. Important piece of information, especially if you're trading options, for example, or selling puts down here, or selling spreads. So there, I've given you some parameters in silver. Okay. The big one on the downside is 29.60. And then, well, to the upside, it's really this last high. Okay, enough of that. This video is already too long. Here's Nasdaq really quick. Man, this looks like 5 down. Really does look like 5 down. So now the question is, was that just an AB? And we're getting is this just wave A? We're getting a B wave now, which should come down a little lower, honestly. But hey, Nasdaq is so wild. I can't even really say what it should do and what it shouldn't do. But what I can tell you is what it just did. It just did a 5 wave move. 21.812. So let me just try to come up with, and if this is really a corrective bounce, then it's moving in 3s. So I allow it to come a little lower. And, I would consider that a B wave, which means they're going to be, I track B waves in yellow and I allow it for it to come a little deeper. But this is also a very much lower time frame. So, and just instinct 2106. Anything is possible. But one thing that looks like a reasonable thing to consider after 5 down, I don't think that's all of the correction. That's just a straight line. This is a 21-minute chart. That is just vertical. So I would consider that an A wave. So this is the way I would think of it in Elliott Wave terms. This is the Nasdaq. A could get a little lower and then come back up Man, if that's the case, this next short would be wonderful for a swing short if it can make it up there. All right. So now this is the speculation. This level right here is just me speculating where the B wave might terminate. I don't have enough price information, and also B waves are variable. So who knows? But stay tuned because this is very, very important level. And I mean, these are parameters of sorts, right? Is this low and that high? So if it breaks, if it comes back up and makes a new high again above that most recent high, then I think it's much more likely that you could scalp to the long side. If it can come up and poke above here, I think they come up and grab this liquidity over here. So if you're looking to scalp, I think it's reasonable. If it comes down to that level, I think it's reasonable to scalp up to 21,100. So so that's, what did I just give you? That's a 300 point potential area to catch some long scalps if it comes back up. Now, another place to long scalp is if it makes it down into this zone correctively, and I'll be able to help you discern whether it came down into that zone correctively or impulsively. Okay. Or maybe it's a shallow B wave. And if it is, the shallower the B wave, then the C wave is going to go higher. And if that's already bottomed right there, then this B wave is going to be, this C wave, the 100 fib is pretty much the minimum for where A equals C. So if that is all of B, which would be a very shallow B wave, then the C wave projects to the top of this box. If this B wave wants to come down deeper to a more standard type of B wave, just for right now, just call it the 618, then the C wave, the minimum, projects to the 100 fib. But because a wave C moves in 5 waves, once this bottoms and there's some more price action develops, I can make projections. I can measure it. Another thing you'll see me do is the extensions for a C wave are the 1236 and the 1382. So if this, but actually, because I like the 100 fib for right now, I'm going to leave it at that for right now. This is the sliding scale that I'm going to be playing around with early in the week. Is that the low? If it comes down a little lower, is that the low? If it comes down a little lower, is that the low? Whenever this thing bottoms, which is what I would expect it to do, somewhere down in this area, then I will look for a nano 5 up, 3 down. In other words, this wave C should be composed of 5 waves. So I will be able to dial in a more exacting speculation once I get more price action, but I'm showing you what I have based on current price action. And that is 5 down and maybe an A wave. And now we're in a B wave. And when this bottoms, we should see a 5 wave move as a C wave. Cool. Dollar. Oh, geez. The dollar. I've changed my thinking on this after doing more homework. It is possible that actually, let me just hop back over here, that this is all of the correction. There's a few different reasons. If this is an A, B, now I know B wave, this is very difficult in here. So I could call this a B wave. And if it is ABC, look, the C would be where this 100 fib is. By the way, not too unlike what I was just talking to you about. This yellow, it's this A, B, C, meaning if this is 5 down and this is a 3-wave bounce, as in an A, B, C, and that would explain this massive move up. It sure does look like a wave 3 of some type. That was my first thought when it was actually happening. I was like, that is a wave 3 or a wave 5. So I am now thinking it's a wave 3. And if it is 106,698, let me just move this over. 106,695. All right. So what you would have here is A, B, C. And after the B bottom, you have 1, 2, 3, 4, 5. right to the 100 fib, and look at the reaction. Now, I had said previously, this is the area I was looking to hold if this was going to keep going higher. Well, it hasn't held there, and this is a 2-hour chart. So you've got 2-hour candles closing below this zone. So it is entirely possible. This is different from what I was saying last week, that if that, and now I can actually show you that this, see this yellow thing, A, B, C, which is why this would be composed of 5 waves, which is what I was just showing you, is A, B, C, meaning this composed of 5 waves. See, this could be, I was just saying that was A, B, C. A, B, actually, I see what I was doing now. Okay. A, B, C. This is in 5 waves. This is a ratio where wave 5 was 100% the length of wave 1 through 3. Now, I know I'm talking over your head now if you're not experienced Elliott Wave guy, but this is a ratio. Typically, you see the ratio smaller than that for a wave 5, but there are times where wave 5 equals the entire length of wave 1 through 3. It's less common, but it is a ratio. And this does look impulsive to me. So if I consider this the top of wave 3, now this zone, you guys know, if you've been following me, I've been talking about this zone all last week. It's either going to break out or break down. So if this was the top of wave 3, this blue area held for wave 4, and that this is actually wave 5. 1, 2, but it's still wave 3, 4, 5. So this is wave 3 of 5. Okay? And if you get a 5-wave move that you think could be a C wave, like this, A, B, C. So this B wave, this larger degree B wave, could have just unfolded in a very complex manner, but it measures okay as a B, C correction, with this being the C wave composed of 5 waves. And then now you are getting the first rejection. So if that's true for the dollar, getting interesting, because I know metals and so many other currency pairs are going to relate to the dollar in one way or the other. So it is possible the dollar topped. So let's now look. This will be the last thing I leave you with. I know this video has gotten too long again. What I'm doing now is I'm just drilling down for the first time and looking at this smaller time frame on the dollar. So I'm just eyeballing this for now. Let me see. So let me just take a couple of quick and dirty measurements just to see what is going on with these fibs. Where do they hit? What might the clues be? You're watching me do this in real time. Yeah, man. Very interesting. All right. Okay. I like this. I think I have some actionable information here to share with you on the dollar. 108.27. So let me drag this over. The idea being, this is just 3 down, but boy, did it grab the 1618 zone. A little bit shy of it. And then what you'd look at after a 1.618 zone is struck in 3 waves, the idea is maybe you're looking for a wave 4. So the way to measure for a wave 4 is put the fib tool at the top of wave 2, put the other click at the bottom of wave 3. And then if you're me, you just go over to your template because you're using these things so often, put on the wave 4 fibs, and you will see that we are currently potentially in the zone for wave 4 with one more shove to come down. And isn't that interesting how convenient there is a zone right down here? And also there's a lot of liquidity in that move up that I was calling the wave 3. Look at all this liquidity. It just would make sense that it come back for that. So another way to think of a wave 4 as well. Now I know I'm getting in the weeds, but some of you guys are really into learning. Some of you guys just want me to show you the parameters. I respect both you guys. I'm trying to deliver both for you. If you have a comment about whether I should be going into this level of detail or whether I should just be giving you the parameters, drop a comment. Drop me a comment. Let me know what you think about just giving you the parameters versus giving you the explanations and making the video longer. Yeah, I mean, this thing 107.59.3. So just eyeballing, I can tell this is already maybe a finished what you would consider for a wave 4, because those yellow fibs is where you would expect a wave 4 to terminate, and we are right in those yellow fibs right now. So here are some parameters that I just am creating for you right now. I mean, it sucks that this is the real parameter, but it is way up here. That's just what it is. So if price gets back above 108.271, then I'm afraid that the B wave is not done yet, and we are going higher. However, if price gets rejected right in here, which, I mean, this is certainly measuring out in all the ways that I'm sharing with you. This is, wow, I'm really zoomed in here. What is this, 21 minute? So let me just move this arrow over. You know, I see this coming back, get back down in this zone. If that happens, if price can come back down into that one, get back below 107.500, if the dollar DXY can get back below 107.500, I think the nail's in the coffin for the dollar to keep showing strength. But it's not as simple as that yet, because really what would have to happen is price needs to keep coming. This is 3 down, 3 down. That's a correction. So if this is 5 up and you get 3 down, and then you build a new impulse that gets above 108.270 and finishes a 5-wave structure, I think the dollar, you're just still in a B wave. Actually, forget about the 5-wave structure. It's just a parameter. If it gets back above this level, it's kicking the door open again to see the dollar get further back up into this B wave territory. But based on everything I'm saying, the odds are there, more than 50% odds that the dollar topped already. But, if you've played poker, sometimes you win. You have a 3% chance of getting a club on the river if you're a poker player like I am. Although I don't play so much anymore. But in terms of odds, if you're playing Texas Hold'em and there's one more card coming and you have 4 clubs and you need a club, or 4 of any card and you just need one more card of that suit so you can hit a flush, which means you're probably going to win based on who's in the hand and what cards you've already are already aware of and how people are betting. It's a 3% chance of you getting that club on the river. 3%. You can win sometimes on 3%. So this, I'm putting at slightly more than 50% chance that top is in the dollar. Am I going to refinance a house and go? No, it's just a clue. That's all. Okay. So watch this level. Watch this level. 107.993 for the dollar. 107. Now that's a smaller degree level. I feel much more comfortable telling you about the 108.271 level. Because if it makes it all the way back up to there, it kind of negates this developing as a 5-wave structure down. But right now it looks really good. It's 3 down and 3 up for wave 4. And you get one more shove down into here. And let me just put a fib down there, because I think it's more likely than not that this would extend down a little further into that zone like that. That would be beautiful, because then you can feel a little better about the dollar having topped. All right, cool. So hopefully I haven't talked too much and confused you about a bunch of stuff. Let me know how you're liking these in the comment section. Thanks a lot for watching, guys. I will see you inside the Professor Trades Club. All right, guys. See ya. Bye-bye.